Alright guys, welcome back to the channel. So today my funds are finally available and I did a day trade on, of course, NIO. I can't stay away from it. And I did lose today. Lost like 12 bucks. Took two trades, one with three contracts, one with one contract. And then I also have some stuff going on in my Robinhood account that I'm going to go over. Mainly how to sell a covered call, because I did sell a covered call today, and I will be going over that after these trades. So trade number one, watched NIO. Been trading around the same price for a little while now, 40 to 40. Well, it's been dropping actually. I'm holding shares at 55, so I'm down on that. But basically opened around where it closed on Friday. And I was waiting for the first pullback to get in to go long, but then I decided that this thing is extended on the 5-minute. Let's get this out of the way. So on the 1 minute, it's in a nice uptrend. All green candles. So it's got to eventually pull back, and I think I want to try and short it. Just starts going up and up. Let's just fast forward this. You can watch it going up until I actually get into the first trade. So you can see just making higher highs. Very bullish. Don't want to get in now to go long because I would be chasing it. So here's a first 5-minute candle. Look how extended that is. There's barely any wicks on it. It's an engulfing, a bullish engulfing candle. So it's mostly all in an uptrend. There's not much pullback on it. And that equates to this over here. So now the second candle opens on the 5-minute. And now we're getting a pullback. But we're coming close to VWAP, and the 9MA is about to cross over. So I really don't know what I was thinking now that I look at it. Can't do market order. So I have a limit price of 145, but then starts to pull up on me, so I do not execute this order. But it's not it's holding. There's not much buying pressure. So I have my limit order at 147. And I did get filled right in between the bid and ask for 3 contracts. So I have 3 puts, so I want the price to go down. But I just bought when it's tapping the 9 crossing over VWAP. How much more dumb of a move can I do? So I end up getting out because I don't trust it. So I took a loss on that for $12.50. I still have $70. I want to try this again though. I don't know why I go to my paper trading account. I'm up $300,000 on stock in that. If it was only real. and I should have waited because it does end up following through. So that would have been, I could have actually probably made some money off that trade. So now I got into a cheaper contract for the push down over VWAP of breakout to the downside. Next 1 minute candle, open it. I wanted it to open a little lower than that. But because this seems like a false breakout through the through VWAP, I think it's just gonna reverse. I don't end up holding this. I end up getting out of this one too. Oh no, that didn't. That actually is going in my favor. I think it's a next candle. So that first trade would have worked out if I held it. It was just a bad exit. But the entry was good. So there, I see green there. These contracts aren't moving. It's way too far out of the money. I end up making $1, so I'm down $11 for the day. My account's at 500, so that's why I deposited. So I basically lost what was left over from the last account because it was like $12 or $13 left. So that's starting off the week, starting off my run back. I'm already negative. And that's that. So let's get into the next video, which is going to be selling a covered call. So in order to sell a covered call, you need to be holding 100 shares of that stock. Since I'm holding 100 shares of NCLH, it doesn't matter the price you're holding it at. It's just you have to be holding the shares. Unless you're going to sell a naked call, which is very risky because if it doesn't go in your favor, you have to sell someone 100 shares of whatever stock whatever option stock you're selling. So you have to fork over the money for the 100 shares. So because I'm holding 100 shares of NCLH, I could sell a covered call. And it's kind of a win-win for me. This is a way to make passive income. If you are holding 100 shares of any stock that has options and you want to make a little bit of cash on the side, you could play it pretty conservatively like I played this. And you're not going to make much money, but it's something. So to sell a covered call, you basically need the 100 shares, and then you go to trade options. Then you want to hit sell call. Now what you want to do is when you sell a covered call, it's just like buying an option. You go and check what expiration date you want. So I'm going to pick January 8th. So that's about actually, no, January 15th. So that's like a little over a month away. So, contract for January 15th for $35. So let me pause this for a second. So the price of NCLH right now is $26.14. I want to sell a covered call, a 35 strike for January 15th. So what that's saying is someone's going to buy this call from me, right? They're going to buy this call for $70. Or I end up doing $69. So they're going to buy this for $69. I get credited that $69. So that's automatically in my account. That's what I profit instantly, is the $69, or in this case $70. Now what they're going to get is the contract, and as long as the contract doesn't hit 35, as long as NCLH doesn't hit $35 by January 15th, then their contract expires worthless. I keep my shares and I keep the premium, which is the money that they bought this contract for, which in this case would be $70. On the other hand, if NCLH does hit $35 by January 15th or before, they have to, this contract gets automatically exercised, and I have to sell my shares, 100 shares, at $35. So $3,500 I lose my 100 shares, and I get to keep the premium, which, I got today. So I end up getting $3,570 overall. The only bad side to this is if the price skyrockets to $45 by this time, which is $20 above the price now, then I still have to sell my shares at $35. So I'm losing out on that additional profit. I lose the shares altogether. So the conservative route to play is $35 by January 15th is pretty far out of the money, and it's a pretty far stretch. $10 in 1 month. This thing doesn't move like that. It's not that volatile. And on top of that, Norwegian has said that they will not be continuing. They will not start up their sailing until the earliest March 31st. So they're down until March 31st. So this thing has been going up on vaccine news, which is good, but I don't see it going up to $10 by January 15th. So I'm pretty sure I'll get to keep my shares and pocket the $69. So I'll show you exactly how this is done. So you click on the price. There's the 70. Total credit is $70. So this equals to 100 shares, which you have. Review order. Then if you read the print right here, this says you're agreeing to sell 100 shares of NCLH at $35 on or before January 15, 2021. So they could, whoever buys this contract does have the right to exercise the contract before January 15th. But usually, I don't think people really do that much, unless the price skyrockets before January 15th and they just want to get it to sell it. But in that case, they would just sell a contract. If you are asked to sell NCLH by then, you keep your collateral, which is 100 shares, and the full $70 credit. So this is kind of considered passive income. It's instant profit, and if you do play it right, you could do this over and over again. So by January 15th, if I don't get a notice that that this contract was exercised, then I'll sell another covered call, and I'll do it all over again. So that's basically how that works. So let's look at my Robinhood account now. It has been going up nicely. I did sell a couple stocks. I sold my Tapestry stock, my Toll Brothers, and Ford, which was all up. I made about $400 profit, and then I bought a couple calls and puts. So the account's up all time $900. I'm in a Pfizer January 15th call, which I'm down on. I'm in a SPY 375 call that expires this week. GameStop put, which expires this week. A January 4th SPY call, which I'm down $7. Here's the covered call that I sold for $69, but now it's worth $76. So if I did wait, I could have got more money for it, but just the time that I sold it. But I'm actually not down $7. That's just what I could have gotten now for it. And then the Pfizer call, I'm down $30, but this expires January 15th, and I have high hopes for this. Just because of all the vaccine news, and they're going to get FDA approval soon, sometime this week. And then here's the stocks I'm holding. I think I'm going to sell this AIKI soon, though, because it's just holding me up. I mean, I'll end up taking a loss on it. I'll hold on to it for a little longer. If it doesn't go up to 70 cents, I'm going to sell it, because I just could use this for other stuff. I want to start getting into more long-term contracts in this account other than stocks. So that's going to be it.